Hello guys, Casper here on a Saturday. I will go through the commodities that we're looking at, metals, obviously, oil, obviously, and a lot of soft commodities. I think there are some very good entries coming up in corn, wheat, corn, agriculture, potentially iron here in 2025. So we will have a quick look at that. And yeah, let's start out. Let's not, spend too much time on the intro. Let's dive into the silver. Silver. I will show you just the short time frame here. Again, this was yesterday, so that's Friday. That candle there, very beautiful. I was extremely excited to finally let go. And then, Trump started to tweet about more tariffs, more uncertainty, and you started to see silver decline, and actually the dollar started to come up quite heavily. So a little bit of a shame here. We could have had a extremely bullish weekly close if we had closed there at like 32.6 or so. That would have been very bullish, but we got kicked a little bit in the face there at the end of the day. Um, we have the blue uptrend here still intact. I know there's a lot of lines going on here. I know. But yeah, we couldn't quite close above the weekly, above that. You can see that long-term red trend line here. That would have been ideal. Again, the close there at 32.6, if we have had that on a weekly basis, gorgeous. The weekly candle here, again, still green, I know, wick on both sides. So again, we missed a great opportunity for a massive weekly close, unfortunately, but still long-term silver is on the path to way higher prices, in my opinion. Gold, I don't have much on here. I just want to delete all the drawings that I have. Do I want to do that? Let me have a look see here. Is that the one? 1 second. I need to zoom way out. We can do that, like remove that. So gold here, again, the weekly stuff here for gold. Basically, there's nothing wrong with the gold right now. I mean, we're coming into that, 2,900, which is a major target, to like 3K, which is obviously always, round number, resistance, or support, depending on which way you're coming from. And you can see the 900, it comes from that move up there. We added to the lows here, to the lowest point here. You can see roughly $900 is a major target for gold. So let's see how far it can go here. But until proven otherwise, we're actually doing quite okay here with that. Again, this is a quick draw, by the way. So with that whole uptrend there, quite beautiful. The red one there, still fully intact. So again, we could see a move to like maybe north of 3K, and then we could start a longer, like February to like June. So we're talking 4 months worth of sideways action is probably coming up here at some point in time. But for now, hey, it's good. I know this is commodities, but you can see here the daily is trying to lurk below that 107.7. We didn't quite close there, but again, a little bit of bearish vibes here. Speaking of that, this is Trump started to tweet a little bit there, and then it had a little bit of strength there heading into the weekly close. But the Dixie here is, to me, when and if we start to close, below 107.7, then we're going down to 105 yeah, 105 actually for the Dixie. Oil is still struggling after, I want to zoom out a bit here. After that beautiful breakout here, we had multiple retests where we could have found, the retest and started to curl higher, but we are all the way back in within a flag that is still, that's the positive side of oil here. As you can see, we're still flagging into a little bit of horizontal support right around here. But we need to break that flag before anything. So for now, we're just sliding down here. And again, I haven't checked the nominal scale. I'm only on log scale, so I will not. But maybe there is some a reason for that deep of a retest there. Obviously, Trump talking about him wanted to drill a lot. Yeah, you never know. Palladium, again, in my book here, still looks obviously very good. I'm still long platinum, palladium, excuse me. And my max greed target is 1,900. Again, that will happen, potentially Q3 in 2025. Until then, it's still a trade that I have on here. Some short-term trend lines coming up here that has been broken. Again, short-term. To me, the target is still valid. We're breaking that wedge. My theory is that this is the right shoulder and that we're going to hit the neckline. And then the measured move is getting triggered. 1,900. We shall see how platinum is doing. Palladium. And now I'm switching around. Platinum, my bad. Platinum. Nothing new here, really. Again, we're still not closing above that, 1,005, 1,050, 1,070, which is where the magic is happening. By the way, check out the post that I did on momentum, the post on X on the momentum on platinum. And by far, platinum has the biggest momentum energy. So if it breaks to the upside, which we think it will, we're looking at a multi-year run where we're going a lot higher for platinum. So platinum, they're still stuck within this little yellow channel here. The uptrend is, you can see the uptrend here, or the flag there is still, intact. But again, we're not going to call anything until we start to get into that zone up there. So copper, yes, copper. Finally, we broke on the 4th, like we talked about. Boom, there it is. First target, $4.77 copper. Second target is the highs up here at 5.2. We might see a little bit of overshooting here we have some long-term trend lines up here that is resistance. But the copper is extremely bullish as we speak here. And yeah, we have 1, 2, 3 flag below. Beautiful. Break. Cool. So copper is extremely bullish in the short term here. And I think we could, over the next few months here, could see, again, from the breakout to the highs, 17, 20% for copper. That is good. That is fantastic. Coal here still can't seem to find, the bottom for this leg down here. Again, ever since we broke that little structure. By the way, if you don't know, I think most of you do, I had a big long going on if we were to close above right there. These two highs at roughly 153, but we couldn't, and we have just been coming down ever since. And yeah, this blue channel here is now fully in play. And since we didn't hold that low there, we are most likely going to see 105 to like 100. And that should be the place now, given all the failures that it has seen. Just about $100 for coal is a major support. And hopefully we see a reaction there. Nickel here, we are going to zoom out here again. I think there's a trade coming up for nickel somewhere in 2025 if we can break it here. For now, we're still on watch mode, but we do have, potentially wave 3 here. We have the first impulse, the second. This could be a very weak third, or we have a huge collapse and then we start the rally. So we're just waiting for this pattern here to break out. We're not going to jump into anything. Gas here, still very long after we broke my neckline right there. And still have my target at around $6. It's been a little bit weak here for the past, what's that, roughly a month here, where we are within that blue uptrend there. So we need to see somewhat of a good impulse here. We don't want this to flag too much, right? That wouldn't be ideal. But yeah, let's see also if that's the case, if that is the flag, all of a sudden gas could potentially start to look somewhat weak here. But until then, we remain bullish. We do remain very bullish. Looking at the coal gas in Europe, that whole grinding, the blue grinding channel here, breaking back above the long-term golden here. So right now we're still just sliding upwards. That is nice. And but the most likely is that at some point we're actually going to see a little breakdown from that channel, unless we can clear the upper. But again, these grinding. You could call it a bear flag, even though it's not quite a bear flag. And you can see here we're also coming into a lot of resistance at 56. You can see we have pivot low here, tag there, and we're coming into that. So let's see how it handles 55, 56 here. Cool. The softs, that is cocoa. One of the best setups that I had, back in my early days of trading, and I messed it up big time. Again, I bought it here. This was my triangle high. I sold in order to buy lower, and the rest is history. I did make a little bit of money, but I definitely left a ton of money on the table there. It is what it is. Cocoa here, again, we have triangle high there. We broke the wedge, that wedge there, and we rallied within this tiny channel. We tagged the triangle, overshot a bit, and then now we are flagging. So overall, still cocoa looks quite bullish. And if we break the flag here, we could actually see an even larger move where the flagpole is pointing to somewhere around $20,000 cocoa futures. 20,000. And roughly 2 years ago, we were at 2.7. That is almost a 10x in something as boring as coffee. Excuse me, cocoa. Speaking of cocoa, I was just going to say here coffee, which to me is cocoa 2.0. 50-year range broken. You add the size of the range on top of the breakpoint, and you get 2.2. So from the break where we called it, anything above 300 is a major long scenario. And now we are at 400, and we are going to go way higher. Are you going to buy coffee right here? Absolutely not. Again, you want to wait for a pause in the trend. And again, that was, if you didn't buy here or the retest, you would have bought here at 330. So now you just want to wait for something, and then you go again. Buy the dip, buy the breakouts. You can see here again, we are close to the flagpole highs as well. Close and close, we still have a little bit more room to run, but you don't buy cocoa here, excuse me, coffee here. Yes, even though I'm extremely bullish, you want to wait for an entry. Sugar. Tagged our low, our parallel here, beautiful. We had a nice little bull flag here, by the way, which failed. We came all the way down to the horizontal, the big horizontal, 17.5 right here, and now we're rallying. So we had a double support there. This is a flag, which we're waiting to break out, so we can just remove that for now. So when and if we start to trade north of like 21, that is when sugar is going to go to like 28. Overall, I want to show you, same thing like the coffee. When and if we break the upper, this is a 50-year wedge pattern. Beautiful. Just like the MKO, by the way, you have everything in play here. I think that we are going to see sugar go all the way. I have my target. You can see it there, actually. That is the target for sugar once we break that 50-year squeeze. We are going to break at roughly, in round numbers, 28, and we could have a massive rally to like 600. I mean, it's incredible. It's going to be a massively good trade. There is an ETF, or is it a stock? I can't remember. ETF. That's Kane. That is the one we are going to use, that I am going to use. And the big break for this one will happen at 15. And from that point in time, you go extremely long. If you're a little bit more aggressive, you buy this flag here, where the break will happen at roughly 13. Head and shoulders pattern there. Boom. The target is for this little one here, at least, a tad below 50. So $45 for Kane. So sugar, at some point in time, guys, it's going to be a big one. Just like cocoa, just like coffee, just like cattle, just like, yeah, maybe even soybeans once we break here. Soybeans, I have this low trend line here, from the 2000s. Massive break there, by the way. And where did we pause? Hey, triangle high. It's a very good place to take profits, by the way, or even sell out completely. And now we are waiting for a trend line here, right? We will add a little alert so we don't miss it. So once we start to break, let's call it 1100 for soybeans. We are most likely going to have the third tag at 1800 here, and then pull back, and then we're going to break on the fourth, most likely. And when that is the case, we can start to do some measures. But again, that is also like 200% on top here for something as boring as soybeans. Boring, boring. But hey, it doesn't matter where you make your money, if it's in something as sexy as silver or uranium or Bitcoin or soybeans. It doesn't matter. Here we have corn, and I think we are about to break here. We have this flag here of that channel. When we break, we're going to see the triangle high get hit again at 800. So the break will happen at just north of 500. Yeah, just north of 500 we will break, and the target will be 830 for corn. And similar, we're probably going to pull back, and then we're going to do like that. Yep, it's going to be expensive. That is hugely, hugely inflationary, by the way, guys. Wheat, similar. We have the low trend line here from the 2000s. We have 2 on top here. Again, the idea is once this breaks, it will happen at roughly 600. You go long. I will show you the trade that I will take. So we break at roughly 600. We will have the stop below, and you will have the target there. So your risk, again, you're getting almost 7 to 1 here, where you're risking 13%, but you're gaining 120. 120%. And the idea is the same, right? We're going to tag, we're going to see a deep pullback, maybe into these lows over here, and then we're going to break on the fourth, and then you can actually do the same kind of measure. So I think there is some great plays coming up here in the near future. And if you're really greedy, you can actually, again, if you don't want to sell the highs and you want to play the longer term, you can easily, again, you have to stomach a little bit more, but again, then you're getting roughly 40 risk-reward ratio at that point in time. So, but taking some profits there at all-time highs is never a bad thing, right? What else do we have here? We have cotton. Again, I think cotton here, the sweet point spot, it is at 0.58 right there. That is when you buy cotton, and you have a stop below, of course. But the idea is that we are going to break the blue, get to the midpoint, and then we can actually go way, way higher. Again, this is a 15-year wedge pattern, and just like everything else, in my opinion, commodities, this one will have a great move there. So you can get a very low risk reward entry. You can play it differently. You can play the roughly here. Once we get to the upper trend line here, you sell with the expectation of a pullback, and then you can buy in again. And you have a tiny stop here below. So you're risking basically nothing compared to what you're getting. So that is your risk reward, right? So you're getting 1, 2, 3, 4, 5, roughly 7 to 1 here again for something as boring as cotton. Iron, this is the China futures, by the way. And what I'm eyeing here is basically that, not picture perfect, but it's still there, that squeeze. And internally, we have a break coming up close by anyways. But once we start to break the upper here, right, at roughly 115, you target the triangle high as the major target. And you can target the next pinpoint, which is there if you want to play the target 1. Maybe target 1.5 here, depending. But to me here, the same is, once we start to break, you have 100% probably coming your way in futures of iron. Tin futures here, a little bit weakness. We have that after that mega surge, puke. That was, by the way, we had a big squeeze coming in here with was it tin? No, that was nickel. Never mind. Wedge here, yeah, we have broken. We are back testing now. So what needs to happen for the bulls is actually this bull flag here needs to break to the upside. Until then, bearish on tin, because we are below the wedge here. And we are riding it here now. So we're most likely having yet another low here. So we're waiting for that flag to break out. at some point in time. Potentially, we have one here, we have the second impulse there. So getting that third impulse makes a lot of sense. Cattle, again, cattle there are called the break there in early 2025, and we are now up. We were up 10%, now only 5. But again, look at how expensive cattle has become over time. It's just grinding upwards. And the red channel here points to 216. And obviously, if we break that to the upside, I mean, we're going to have a mega short squeeze kind of surge going on. But yeah, cattle is still looking absolutely amazing. Again, you don't get the 5-baggers here in cattle, but still. Rhodium. Yeah, rhodium. Wow, rhodium. It's one that I'm watching here. We have our big red channel. We tagged it twice. We did a little bit of a pump here, coming down and breaking down here. So right now, again, it is an extremely bearish breakdown, unless, again, we're not going to do anything, but you can see we have been breaking down and we have retested. So if we can get back above roughly, let's call it 450 and just stay there for some time, that is actually extremely bullish for rhodium all of a sudden. But until then, we are not interested in rhodium at the moment. That's all, guys, that I have for you for the commodities. I might missed one or two, but again, I hope you like the content, guys, and let me know what you think. Again, I think these soft commodities can be a great investment, for the next few years. Again, earning 100-200% on corn and wheat. Again, no one talks about that, but hey, it doesn't matter. You're making money. So have a great day, guys. Cheers. Bye.